Massive alert. Everyone, just like we've been warning, black swan events are showing up left and right. And guess what? Another one just hit today. We're going to break it all down in this video. What's wild is how perfectly timed this is. Because tomorrow, it's not just another day. It's arguably one of the biggest moments in financial history. At 2:30 p.m. Eastern Time, Fed Chair Jerome Powell will go live with the FOMC press conference. That's when we find out what's next for interest rates. And trust me, this decision will shape the direction of the entire market. We're talking about a moment that could either push us further into pain or start a full-on correction. And the most unpredictable part, these so-called black swan events always seem to hit right before these big Fed decisions. So what's the latest twist? While the US is expected to hold rates steady, which isn't a huge surprise, China just made a big move. They cut rates by 10 basis points and lowered their bank reserve ratio by 50 points. That's a clear signal. Stimulus is back in play. And historically, whatever China does, the US tends to follow not long after. So don't be shocked if America starts cutting soon. And when that happens, we could flip bullish fast. But here's the catch. Bitcoin suddenly pumped today out of nowhere. Supposedly, it was tied to rumors of a trade deal involving China. But to me, this looks more like a setup, a trap, right before Powell possibly sends the markets crashing tomorrow. Here's a pattern I've noticed, and maybe you have too. Right before major events like FOMC meetings, the market behavior flips. If there's a rally just before the announcement, we usually see a dump right after. But if prices drop beforehand, they often bounce once the Fed speaks. It's like a script that keeps repeating. And the current volatility, it's off the charts. Bitcoin's spike is strange enough, but here's where it gets even more bizarre. Gold is also surging. It jumped over 3.5% today. At the same time, tensions between India and Pakistan are escalating, and that's what some say is pushing gold higher. So here's what's happening. Bitcoin is flying, gold is rallying, and geopolitical tensions are flaring up. Something doesn't add up. It all feels just a bit too perfectly timed, doesn't it? And let's not forget we called this. We've been warning that black swans are out there. We said they'd show up before key financial events, and this one hit today. But I'm telling you, this might not be the last. I still feel like an even bigger shock is coming. Something huge could be on the horizon. Ask yourself, why did Bitcoin pump on news like that? It doesn't quite make sense. And when things don't add up, you know it's time to be cautious, because this feels like a trap, and you don't want to get caught. Honestly, I can't say for sure what's going on just yet, but by tomorrow we'll likely know whether this whole situation is a setup or not. If the Fed comes out with a positive bullish tone, then markets might rally. But here's what feels strange to me, the timing. The Federal Reserve meeting happens tomorrow, and just before it we get hit with a black swan event. A little too perfect, don't you think? Now here's the weird part. Despite this unexpected global incident, markets didn't crash. They didn't even dip. That's telling. It makes me think the Fed might not be ready to cut rates yet. Maybe they're still waiting for something bigger, a more dramatic black swan to justify making that move. And guess what? We saw this coming. The only odd piece in this puzzle is Bitcoin. It suddenly surged, but that was likely triggered by something external. There's even footage I'm not going to play here, but I'll leave the link below if you want to look deeper. Reports show rising tensions and military activity involving Pakistani forces, and it's possible this event could escalate into something more serious. Could it drag other countries into it? Too early to tell, but it's definitely worth watching. Now, strangely enough, all of this geopolitical tension and market uncertainty may actually benefit the financial markets. Why? Because it could lead to more government stimulus, more money printing, and whenever that happens, investors start hunting for safe havens. Just take a look at what's going on. Inflows into gold ETFs, ultra short-term treasuries, and low volatility stocks reached $18 billion in April. That's the highest monthly inflow since March 2023. People are pulling money out of riskier assets like crypto and stocks and moving it into safer territory. And it's working. Defensive sectors such as consumer staples and utilities are already seeing gains up 3.7% and 1% respectively so far this year. But the biggest standout is gold. It just hit an all-time high of $3,500 per ounce. Investors are going all in on safety right now. Why the sudden rush into these safe assets? It all points back to fear, specifically fear of unexpected global events. And while no one can perfectly predict a black swan, sometimes your gut can sense the storm coming. Speaking of preparing for a downturn, have you looked at what Warren Buffett is doing lately? Take a look at Berkshire Hathaway's cash reserves. As of March 31, 2025, they're sitting on a jaw-dropping $347.7 billion in cash. Let that sink in. Why would the most legendary investor of our time be holding on to that much dry powder? The answer's pretty clear. He's waiting for the right moment to jump in when prices collapse. Not just a minor dip, a real economic downturn. During the 2020 crisis, he only deployed a small portion of cash. It's all in the charts. The cash started rising in 2019, then surged as markets rebounded, but it's continued to grow since then. So here's the takeaway. Buffett might not just be waiting for a simple recession. He could be preparing for a full-blown market crash. Right now he has enough cash to buy 476 companies in the S&P 500. That's not just sitting on the sidelines. That's preparing for something massive. When the crash happens, it might not just hit a few stocks. It could take down the entire market. Hold on a second. I just realized something I hadn't really processed before. Warren Buffett isn't talking about a simple recession. He's hinting at a full-scale collapse. And not way down the road. He believes it's coming within the next few years, possibly even sooner. That's when they'll deploy their massive cash reserves. Why? Because Buffett said in plain words, every so often something big shows up. Not often, but it does happen. And when it does, you have to be ready. He said it might happen next week, or it might take up to 5 years, but definitely not 50 years. Let that sink in. He's clearly watching for a major event. It could hit any time between now and 2029, but based on what we're seeing, black swans showing up more frequently, it could be a lot sooner. At some point soon we're going to see opportunities flood in. He even joked that it would be more exciting if it all happened tomorrow, but realistically it's probably not that close. Still, we're clearly in that 0 to 5 year window he talked about. And just like the slow build of risk over time, it's like aging. If you're 10 years old, chances are you'll live to see 100. But if you're already 114, the odds shift drastically. Buffett's thinking follows that same logic. The closer we get, the more likely a financial reset becomes. Here's where it gets even more interesting. The Dow to gold ratio just touched a level it's only crossed 3 times in history. Once in 1929, again in 1973, and during the 2008 crash. Right now that ratio is sitting at 12, and each time it dropped below this level in the past, it signaled a market breakdown. In 1929, the crash triggered the Great Depression.